What's better than earning money from a 9-to-5 job? It's earning money while you sleep, which is made possible if you start investing. You're listening to the Real Estate Investing Demystified with your very own dynamic duo, Ava Benisaki and August Biniaz. Tune in as we discuss everything real estate, both on the passive and active sides. We feature life-changing stories of today's real estate leaders that will help build your own roadmap to success. This is a show that will lead you to a diversified portfolio, a much bigger revenue, and a next-level venture that brings you a smooth cash flow. Let's get this episode started. Welcome back to Real Estate Investing Demystified, everybody.
Real Estate Investing Demystified. I really like that name.
August loves saying it like that.
You know, I like
he
it.
gets so excited.
I enjoy that name that we have, and now we have a reporting platform connected to our YouTube show.
We do, guys. It's really exciting. We're actually trying to go to all the top conferences and actually interview the experts that are at the conferences.
Real estate conferences, real estate focused conferences. So we're going to be talking about interview the attendees, interview expert guests, the hosts. So
check that out on our YouTube show because we just went to the best ever conference, a very large conference. There's a lot of people there, and we got some incredible interviews in.
We did. John Chang with Marcus and Milicha, a bunch of other great people that we introduced. So watch that on our YouTube show. It won't be on our podcast. So if you're listening to this on our podcast,
that's right,
jump onto our YouTube show and check out the interviews we've had at these guests. But
speaking of Real Estate Investing Demystified, speaking of interviews, speaking of all this kind of marketing stuff that we're doing here at CPI Capital, today our guest is actually kind of an expert in marketing promotions, and we always have this talk that marketing is it plays such a significant part in the growth of companies, the success of companies. So I'm excited to dive into the mind
absolutely,
of our
and
guest.
he's not only an expert in marketing, his background and his foundation is in marketing, but he's also an expert in multifamily syndication, real estate, private equity, all that kind of stuff, real estate in general as well. So we're excited.
The two of that recipe combined is really a recipe.
No, 100%. Great point, because I did a poll on LinkedIn about this. Yeah. And I said, what is the most important part of a real estate investment firm? Is it their acquisition team? Is it their asset management team? Is it their marketing team? Yeah. And the answer, but it was pretty largely
a lot of votes went to the marketing. Very cool.
Yeah, they say that a inferior, well-marketed product always beats a superior, less marketed product.
That makes total sense.
So let's get into it. All right. Let everyone know our guest.
Let's do the bio here for our guest. So today we're actually joined by Mike Desrosiers.
Like Crevassier Desrosiers. Ava, come on. It's such a perfect last name, Ava. Desrosiers.
Mike Desrosiers.
Perfect.
There we go. All right. A little bit about Mike, guys. He's the founding member of Growth Capital Group and a general partner in 1,200 units with over 100 million in assets under management. Okay. His properties are in Texas, Kansas City, Las Vegas, and California. Now, Mike's focus has been on undervalued properties, which offer forced appreciation through cost-effective renovation and proper management. Now, Mike's experience includes over 30 years as a CEO of a successful promotions and marketing agency and has many years of real estate transactions. He resides in California and is also a licensed private pilot. It's a little fun fact about that.
Yeah, we'll get into that later on our show, but yeah.
Great.
Yeah, no, awesome. I think we believe this interview with Mike will bring, great value to both passive and active investors. I mean, you can kind of see what he's achieved with his marketing background, but that marketing is a big point of this show. So welcome, Mike.
Welcome to the show, Mike.
Oh, thank you so much. Appreciate you inviting me on. Ava and August, we've talked before and at the Best Ever conference. And I just want to say I did see some of those videos that you did of people there, and it was awesome. I love that. So I'm happy to be on your show and happy to have this conversation.
Thank you. We know you're going to add lots of value to people listening. Maybe you can start off, Mike, by just telling us about your background and then how you got your start in real estate.
Sure. Yeah. So I've been as you had mentioned, I've been in the marketing and promotions business for quite some time. So I've had a business that kind of focuses more on the high tech and the biotech industry as kind of more of our clients, and I've had that business for almost 35 years, which is crazy. Sounds like quite a long time. But I've focused on that market and dealing with those executives for many years. And But my side hustle was also, always real estate, and I'd always had rentals of some sort of another, usually on the single family side, and and I've had multiple businesses in my career, and quite frankly, they've all, they've done well, but really at the end of the day, it's the real estate that is where you really, gather the wealth, and that's kind of what drove me into this whole direction. And now my world is really 95% all real estate, and the 5% still into the promotional marketing business, which I still have, but it kind of runs more on autopilot. And I got drawn into the multifamily and saw that opportunity of how to expand that.
Before we get into multifamily, Mike, let's touch on you're in California. Have you always been in California?
I am, yeah, born and raised Northern California.
Did you start investing in single family in California?
I did.
Okay, and what was the strategy there? Buy single family, rent it out. What were you kind of talk to us about your strategy when you invest in single family?
It's been a combination. It's mostly been the buy and hold, but there's been some flipping along the way as well too. And I've done that I've done that all my life in California. And although California is not a terrific market for investing, certainly in multifamily, just more due to the rent control laws and things that kind of come along with that. But I can tell you, there's not a whole lot of states that have shown the kind of equity gain over years, right? So the problem is, appreciation. The problem is you got to go in and you buy it, you pay a super high price, and
negative cash flow. Negative cash flow, super low cap rate, which just does not make sense for syndications and investors and so forth. But if you're using your own money and buying and just holding, and you don't care, right? You're just waiting for the 10 years. I mean, prices have gone through the roof, and builds equity quickly. Absolutely.
That's incredible. My mother-in-law pretty much says this every week. Real estate is like gold. Just invest in real estate. So you're doing that in California, which obviously has played a big appreciation game.
The apple hasn't really fall from the tree there in that situation.
I mean, I have to say, just as a point, I mean, I say this all the time, but my father purchased his house in California, close to where I'm at now, and for $32,000 back in the early 70s. That home is worth well over $1 million. I mean, try calculating that, right?
Yeah, return on investment.
Yes, absolutely. No, yeah, keep going. Tell us more. You're doing your business, you're CEO, and in your, you talk to us about the business you were involved in, marketing. Tell us a little bit more about that.
I'd like to learn a little bit more.
Sure. Yeah. We create these promotional posters for the high-tech industry and the biotech industry. And so what it is kind of these like aerial view designs of different clusters around the United States that host significant amount of those industries. Like, for instance, Silicon Valley, right, which is kind of the biggest and more of our flagship product. And we do this like large poster of Silicon Valley. It's kind of an aerial view of Silicon Valley, and it shows where all the high-tech companies are at, but it's done in more of an artistic 3D style. And the companies actually pay us to go put their logos on the map and a rendition of their buildings. And then we produce this large poster with a calendar at the bottom, and it's customized for the companies. And so they'll order copies to hand out to their customers. It's kind of like a promotional product for them, right? Like the hats and shirts and pens and things with their logo on it. But we have companies like Cisco and Intel and HP that order from us, and been doing this every single year. And Cisco orders 5,000 copies and ships them all over the world to all their companies. And so it's a very niche market. It's, it's just a niche market, but we do that for Silicon Valley, and we do it for quite a few markets around the country, from, one of Arizona called Silicon Desert, and one of Oregon, Washington, Silicon Forest, Texas, Lone Star Tech, and so on. And then we also do another series for the biotech industry, and we've even done it overseas. We do a Silicon Europe and a global biomap and things. And so we've actually gone to these trade shows overseas and promoted them over there.
Awesome.
Right on.
Awesome. And then, so investing in single family, and then talk to us multifamily. You were getting into it, and I kind of interrupted you. But tell us about what your start in multifamily. Did you invest as an active investor? Did you invest as an LP? Did you have a joint venture partners? What was your start in multifamily?
Yeah, no, I actually jumped in right away. I did not come in as an LP. I came in through some of these education networks and the education systems. I personally came in through RE Mentor, through the David Lindahl program, which was just amazing. And I went through that, and honestly, my wife kind of dragged me to it. I didn't even necessarily really want to do it. And she's going, "Oh, you'd be so good at this, right?" And because it was already kind of my wheelhouse, but I'm so busy and and all that, and so, I don't want to do that, right? But I went, and sure enough, like it was aha moments, over and over and over, right? And I'm not the type that, like, I'm the kind, I'm a hard sell, right? I'm the guy that's sitting in the back of the room of the timeshare presentation with his arm crossed, right? Nobody's going to sell me, kind of thing, right? And I fought that, and I didn't buy into that right away, but I then eventually did, and started just absorbing into the education. And it just all started making so much sense to me, because I guess because I've already kind of been a bit in that world. But the whole idea of using other people's money, raising capital through syndications, and even buying out of state, which was just a hard thing for me to absorb at first, because being in California, and everything I've done is all kind of very close to me, so I'm able to kind of touch and feel it right away. But the whole idea of buying out of state, and running a property from a distance like that, but it made all perfect sense. And I bought my first building in Las Vegas. That was kind of more of a test building for me. It was a smaller building, and I went in to run the property myself. I used my own funds to do that.
Multifamily? Was it a multifamily project?
Multifamily, yeah, small multifamily, yes. But just dealing with the tenants, dealing with the any issues and things, and it went really well. I mean, I still have that property now today, and it's practically double in price, and
How many units was that one, Mike?
that is just a fourplex.
Oh,
Just
very cool. And I have a quick question for you. How long? We actually had a booth at one of the RE Mentor. I think it was in Phoenix,
Yeah,
right?
that's right. That's where we met. Yes.
Yeah, that's right. But I was just going to say, it's a very happening event. As you know, there's a lot of people there. So, how long was it? And I'm just curious, how long was it since you joined to then when you first took down your first property in Las Vegas, the first multifamily that you took down?
I probably joined in 2018, so that's 4 or 5 years. But it really took me like the first year I didn't do anything, like everybody else. And I love telling this to others, because there's so many people that are in this space and tend to struggle getting into that first property, and then they always they're concerned, like, what's wrong with me? What am I doing wrong? Blah blah blah. And I always want to encourage them to just stick with it, because I did the same thing. In my first year, I had troubles getting into my first property as well. And it's a lot. There's a lot of moving parts, and you're trying to do usually too many things yourself, as far as the broker relations and the underwriting, and all these things that you have to do to make a deal really work. And I actually got drawn. I partnered up with another group locally. My wife and I and another couple did that are close by, and we started kind of getting on Zooms and doing all of that. And they came from a different education system, Fortune Builders, and which is more single family based, right? And then I can talk them into going through the multifamily, and so I talked them into getting into this RE Mentor, and they went to the course, and then I went back to the course with them, just kind of more as support. And I ended up pretty much being in the back of the room the whole time, kind of talking to more of the staff, because I knew them, and the instructor, people and all that. But one of them, we just kind of sat down on heart to heart, and I was explaining this to him, that I was having these challenges and kind of getting a little frustrated. I said, I know the information. I've been talking about it. I feel like I've been talking this, quite some time to potential investors, and they keep coming back to me and going, "Hey, you got, do you have a deal? Do you have a deal?" And I'm saying, "Well, we're close. We have some LOIs in, and I'm talking about it." But it got to the point where, to be honest, it was a little more embarrassing, right? That I didn't have something yet, because I've been talking about it. And he said, "Have you, thought about capital raising, and maybe coming in with some, partnering up with some others that are, getting into deals and help, they're willing to bring in general partners?" And I said, "Yeah, I think I could do that. That's something I feel very confident with." And so he immediately introduced me to another team that was acquiring properties, and but were having more trouble, raising the capital, and they'd already had that momentum going. And so they invited me into a property that they were active on. I put in some of my own money, raised some capital, not a whole lot, but I didn't really expect to raise a lot on my first deal because, it's your first deal, right? But I was just happy to be able to send that out to my investors, right, with my profile on it, and just basically proving that I'm really doing this and I'm in that space. And that worked great, right? So it not only got me in as general partner on that deal, but then they got into another deal and quickly invited me into that because they do have a lot of business experience as well, and in the marketing and advertising and so on. And so I was able to help some of their systems and things other that they were doing as well, because they were in a high growth mode. And they invited me to another deal, and I was able to raise more money for that. Then another one, and then I ended up getting in my own deal, and then brought them in to help sponsor with me. And then I got invited to another team out in Kansas City that were in contract with this 426 unit property out there, and nice. I was able to raise, a little over $1 million for that. And so it rolled fast, right?
Nice.
Yeah, that's amazing. And I wanted to just quickly touch on something.
Yes.
Let's talk about raising capital, because you mentioned you were raising capital for quite a few deals. You live in California. You mentioned Silicon Valley area, I believe.
Yes.
Do you tap into that market? Because there's a lot of high net worth investors that live there. What did you tap into first to start connecting with investors?
What was your first phone call?
Yeah, first phone call. I've been an entrepreneur my whole life, so I do kind of work in that circle, and I do have a broad array of friends that are all in that space, that are all kind of entrepreneurial types. So those are typically my first inner circle investor pool. But since then I've started a local meetup. Yes, we definitely get some Silicon Valley people up there. We are definitely working in that space. I connect with them really well because, again, in the advertising marketing business, I've already, built relationships with these people, and so it's easy for me to talk with them. And I'm also an investor myself, and that's I think another big tip or trick to being a capital raiser is just being able to talk as an investor, right? Because you need to know the type of things an investor would look at, and the things that are important, and then be able to talk to them on an equal level that way.
Absolutely.
That's great. And
now you mentioned you were partnering, you were kind of co-sponsoring, co-GPing. Did these co-sponsors, did they allow you to kind of check out, what everything looked like as they were closing on deals so that you could learn along the way? And then that was how you kind of were able to close on your first deal. Did you learn a lot from them? Did they open up the doors to you kind of coming in and
the books for like underwriting?
That's right. Yeah. Like kind of walk you through how they did things, or were you more just kind of hands off? I'm just curious to know that, because a lot of the times when you partner with these bigger groups, it's a great learning lesson so that you can eventually go and do your own big deal.
Yeah. No, I jump in. No, I'm immediately for sure. I need full transparency and everything, and access to everything. So yeah, I was able to go in and look at the underwriting. I was able to go in and look at the everything that was done to acquire the property, from the contract all the way from the LOI, up, and rent comps, CoStar reports, everything that was available on the property at the time. And then, of course, the whole business plan, and looking into all of that. I could see, quotes for the CapEx and everything else, right? So that I was able to jump into that. And I also, I'm one that jumps into everything. It's probably a fault of mine, because then I'm taking on too much, right? But I jump into the property management calls. I jump into I'm on almost all the property management calls on all of my properties, right? As well as the general partner calls, and other things that go on even during the week. So you can imagine it's quite a bit of Zoom calls when you have 13 properties and you're trying to get on all of them.
Got it.
Yeah,
Got
absolutely.
It. Awesome. Yeah. I'll break this down very quickly for viewers and listeners who might be a bit lost about co-GP and all of these concepts. Just to quickly break it down, when you acquire institutional multifamily assets as a general partner, that general partnership can also be divided up into multiple partners, right? This business essentially has three main components. It's got the acquisitions, basically sourcing the deal, underwriting the deal, and all that details that goes with the deal. You got the asset management, which is basically executing the business plan after the deal has been closed. And you got the equity side, basically is raising capital, if it's debt and equity, investor relations and what have you. And sometimes general partners get together and one of them is really great at one of these main points, and then they partner up and they do deals. And in this case, Mike was more focused on capital raising, but also assisted the group with asset management and marketing side of things as well. So that's how really these partnerships come together. So just want to touch on that.
Close on bigger, better deals as well. You can't do it all by yourself. There's no way.
And also just compare this to the institutional side. A lot of times you hear about Blackstone doing large deals and closing and buying actually multifamily assets, similar assets that, us and Mike purchases, but they partner with a sponsor as well. We have the Canadian Pension Fund that partnered with Greystar to buy and build multifamily in the US. These partnerships happen on the institutional level, so it happens on the retail level for us as well. But going back to you, is the plan long-term to stay as a boutique private equity firm that raises equity and advises and partners as a co-GP with these sponsors? Or is the plan for you to get involved on the operational side and build that side of the company, what it is? And I've seen success in both sides of the business, but what is your plans? What is your long-term vision?
Honestly, it's both. I mean, I think I have one of the things that I really love about this business and that I'm thriving on is the partnerships. I really enjoy that, right? In advertising, you don't do that, right? You don't go to you wouldn't be sitting around a table with a bunch of advertising people sharing ideas. Right? Nobody does that, but they absolutely do in this multifamily space, and collaboration is so thrived upon, and everybody loves that, right? And the best ever. It's like all these people running around. They're not competitors, man. These are all people that could be or might be really good partners to do different things. And as you said, it's you can't do this by yourself. It's a team effort. It's a team sport. It's like being on a rowing team, but everybody being on the right side. You could have the strongest rowers on the planet, but if they're all rowing on the right side of the canoe, it's going to go in circles, right? So you need everybody doing their equal part and pushing it, forward. And that's exactly what it is with these partners that I've partnered up with. And they see the value in me, I see the value in them, and we're each, and then you're able to do your part and you learn it. And when you really feel like you've learned a lot, then you get to go in and learn more, and then learn more, and then learn more until you really get really good at your craft and you become a very valued partner to the others. And so everybody does, they get in and it just works like a very well-oiled machine. Nice.
Absolutely. Yeah. Talking about leveraging partners experience.
We were curious, what is it that you look for in operating partners that you want to partner with?
You have to like and trust, that's probably key. And the ability to learn, people that are really want to learn and get better at whatever they are. And, they have to kind of think alike, but yet you do want them to look at it a little differently, so you can have different ideas and concepts that come to the team. Yeah, that's kind of it. And then
aside from the gut feeling, kind of the when you meet someone and seeing about their vision and what have you, is there a particular boxes that have to be checked? Like, for example, when we were looking to partner with active operators when we first started out, they had to have at least $100 million of assets under management. They had to have taken deals through its full cycles. We had all these check boxes. Is there particular things in your boxes that need to be checked that you look for in a sponsor, an operating partner that you're looking to partner with?
Sure. But I do partner with with different types. So obviously, if it's a key principal, if it's somebody, yes, they have to have a very good resume. We do, credit checks. We need to make sure everybody is, up on board. That's key. And then on down, depending on who's doing that, is certainly an asset manager that has some experience in that is very important. But then I also partner and sponsor deals for newer students that maybe don't have that I'm in that position now as well, that I actually sponsor for other people through RE Mentor and through some of these other organizations, and they'll actually bring deals to me to sponsor for them. And sometimes I'll even bring in other partners into their team if they don't have enough experience. But I also enjoy that portion of being able to pay back and help. We're all climbing up this ladder, one step at a time, and we're all reaching up for the next level. But at the same time, we can put a hand down and help grab somebody else and bring them up that ladder.
Awesome.
That's a good feeling.
You're a great guy,
That's a good
man.
feeling.
We know you do a lot of that. We've seen you at how well you're respected at these events.
Yeah,
now,
absolutely.
Without deal, none of this is possible. Let's get into deals. What type of deals you look for? And Ava, if you want to take the lead here.
Yeah. What regions are you investing in? What are the regions you're investing in, and why?
Yeah, tell us about that. Again, is there checkbox in certain regions you like, or is it deal by deal basis? Somebody brings you, one of your students or mentees brings you the deal, one of your co-GPs brings you the deal. If it numbers make sense, then you look at it. Or is there particular regions and markets you're looking at? Are you following certain data where you want to stay away from when it comes to rent growth and population growth and income growth, all that stuff? How do you go about looking at the next region you want to invest? Where are you bullish on right now?
Absolutely. Well, I've definitely been drawn more into the Texas market. That's where my stronghold is at this point. I was kind of just led there, mostly due to my partners and bringing into deals. But I really do like that market, just given that it's centrally located in the country. It's easy, accessible to both coasts. The weather and the economy seems to be better there than in most places. We're seeing a lot of companies moving into Texas from. Even Hewlett Packard moved there from Silicon Valley, and we're seeing Tesla and Amazon plants and so on. It's because of its central location. So,
well, you know that because your business was actually seeing where these big companies move to. So you're a master when it comes to the relocation of these companies.
That's right. I pay attention. I've always paid a lot of attention to that as well. So, and I see that migration, and it makes a lot of sense because the cost of living is lower there. It still has a very high population, so. They can draw from employment, and being able to bring in, tech employees or employees, higher paid employees for that industry, but they don't have to necessarily pay them as high as they would, say, in California or New York, or, right. It's a lower cost of living, and obviously a way less cost of operations for that company, just as far as their office space, real estate, and all the other things that come along with that, and also the taxes. So anyway, there's a lot of drive there, where the employment goes, the population goes, and that's the kind of indicators that we really look for as far as buying these apartments, because it doesn't guarantee success, but it kind of puts a feather in your cap, right? If the population continues to grow, people need places to live, and Texas specifically has been just exploding. With that said, I do like that whole Southeast market though as well. I've looked in the Atlanta market and Tennessee, all of that, South Carolina, North Carolina.
Talk to us about a little bit of a market prediction. Obviously, right now we're in a choppy environment of the market. The interest rates have gone up drastically over the last year. I think it was the fastest growth ever in history. They've gone up 500 basis points in just over a year, approximately. This is the Fed's funds rate. Interest rates have gone up also even more than that when it comes to B lenders and what have you. How do you navigate in this environment when there is obviously a price discovery as well between what the sellers are asking and what the buyers are willing to pay? That arbitrage between interest rates and the cap rates on the going in cap rates. How are you navigating this the current environment? Are you sitting on the sideline? If the deal still makes sense, are you going in? Are you looking at only assumable loans? What is your prediction about the market? Are you still looking, currently actively looking at deals? Talk to us about your view about the interest rates and where the market is at.
Yeah, absolutely. I think it's a terrific opportunity time right now. We are definitely not pencils down, but we are pencils kind of extra sharp. And there are deals there, and you just have to kind of navigate through that. It's a challenge with some of the properties, that not cash flowing quite as much as others, but as long as you don't run out of money, you're fine. We just ride through this and hold on, and it will come back. There's no question about that. As far as on the buy, I mean, we're in contract now with, Marcin Droz, Marcin, and he's
Well, I got your email in my inbox for your deal. So yeah, but
yeah.
keep on, yeah.
And that's, a fantastic deal. And it's a perfect example of how to navigate this market, right? Here's a property and, that was in, they had this property up, upwards in the $16 million range, right? And, an offer came in from Marcin at the, I think it was roughly in the 13 million price point. And the broker came back, and this is several months ago, and before all this was happening, the interest rates, and the broker came back and, pretty much put his hand up in front of his face and said, forget it, take your offer and, go fly a kite, right? Because it was just too low. Well, then the market, the interest rates went up, right? And all of a sudden things kind of started to soften. And, sure enough, a couple months later, the broker's calling Marcin back and saying, hey, that offer of 13, well, we might not take 13, but we'll, you might want to put something close into that, right? So, of course, Marcin, being the smooth negotiator that he is, he comes back and says, well, now with the markets, it doesn't quite hit that, but, and then anyway, puts in a lower offer below 13. And then, went through some due diligence. There were some occupancy issues, and bottom line is, we're in contract at 11 million on the same property.
Really? Oh, wow. Nice. Okay.
So 77,000 a door. And, it was good negotiating on Marcin's part, but also timing was great. And, it's a seller that ran out of money, bottom line. So he had to sell, and he was on the wrong loan, running out of money. There's definitely some deferred maintenance on the property, but nothing that's not fixable and, that we can fix up quickly. And so it's just kind of taking advantage of the market. And that's what is out there. But you do have to kind of dig deep, and you have to stay, tough on your negotiations and your price points, and, the deals will happen.
And this was an on-market deal, right?
This was on market. Yeah, it was on market at the time, but it was on. Yeah, and it's funny because I have since we're in contract on it, I've had several people emailing and going, I was on that same property, but had no idea they'd go that low on the price, right?
So, you don't know if you don't try, and that's some people just got to get out this.
So deals are still
took months. It took we're talking a 3-4 month period here, or more than that, really. So it's about sticking with it and kind of sticking to your guns and stick with your your underwriting, and only just put the number in that makes sense. And if it doesn't, move on to the next.
And say you're an interested buyer, and have that broker come crawling back to you after.
For sure. Yeah. Before getting to the next segment of our show, let's get a couple of more questions here. What advice do you have for somebody looking to get into, real estate syndication or real estate private equity, multifamily? What is your advice, particularly someone who is a high income earner? They've been very successful in their field, and that seems to be most of our guests that we interview are people who've been very successful in their field, but they got into this space. We have a lot of physicians who've done the same. My mother always wanted me to be a physician, but I'm like, Mom, look, all the doctors are leaving their business and they're coming into our business. So what advice do you have for someone who is a successful high income earner who wants to get actively involved in real estate private equity?
My first advice, honestly, would be to go in as an LP. And I think that's a great way to, step a foot into the business. Just that LP can certainly let the GP team know that, they're interested in more information. And usually it's a very open book, at least on all of our deals are for all of our investors. They can get as involved as they want if they really wanted to get more information. But especially as you say, physician, like if you're a brain surgeon working on an operation room, the last thing you want to do is be thinking about tenants and toilets and trash on an apartment building that you have or something while you're in the middle of an operation, right? Because it does take some brain space. I mean, you have to put yourself in that space, keep that hat on, and keep on top of the properties, whatever you're doing. slowly gravitate into that and figure out if that's really the space that you want to be in. And then as you do that, I've seen that many times where we've had investors that come in as LPs and then kind of move into the GP space, and they gain a tremendous amount of knowledge along the way, and they see how different operators are operating, and you're able to figure out what you like and what you don't like, and then you're actually much more qualified to pick partners at that point, because then now you have some experience of that.
Got it.
Great advice.
Awesome. Great. Thank you so much for sharing all your wisdom, knowledge, sharing your current deal that you're working on. Yeah. Exciting stuff. And we'd love to bring you on our show at some time in the future and talk about how the deal is going. But let's get to the next segment of our show. All if right. You don't have any other questions.
No, Ava, I'm good.
Because,
I'm ready to.
You have access to Mike's brain power right now. You can ask him any question you like, Ava. Is there anything that's...
I think he did a great job. Yeah, we covered it. All right, we're going on to the next segment. It's called the 10 Championship Rounds to Financial Freedom. Mike, I'm going to ask you some questions, whatever comes top of mind. Are you ready?
Okay, I'm ready.
Here we go. Number one, first question. Who has been the most influential person in your life?
Influential person would be my father, I would say. He's passed away at this time, but he's absolutely somebody who set kind of my morals and my standards, and I think the way that I drive life from the beginning. So
beautiful. Wonderful. Next question, Mike. What is the number one book you'd recommend?
I followed the Tony Robbins. I love Tony Robbins' motivation. I stayed there. Awaken the Giant. It's been. I like keeping focused on the high energy, and that's important to me.
Nice. Have you read The Life Force? Tony Robbins?
I have not yet, no.
Okay.
My wife bought it, but I have not read it.
Nice. I hear it's a good one. Awesome. Okay, next question. If you had the opportunity to travel back in time, what advice would you give your younger self?
I would say don't hesitate and jump on the opportunities quicker. Don't hold back, and don't waste time on the little stuff.
That's right. Okay, nice. Okay, now what's the best investment you've ever made?
Would say investing in myself. That's probably it, right? And that's a big question there, but there's been quite a bit of investments that have been very good, but it's believing in myself, I think, is the number one.
Amazing. Now, what's the worst investment you've ever made, and what lessons did you learn from it?
Maybe believing in someone else that I didn't quite qualify myself. So I think trusting too much without verifying.
Yeah.
Got it. Getting into a deal without trusting too much, verifying could cause problems, definitely.
Yeah.
Okay, Mike, now how much would you need in the bank to retire today? What's your number?
I look for around the 50 million mark.
Nice.
Got that. We've got 10 million, we've got 50, we've got 100.
Yeah, there you go.
Not yet a billion. Not yet a billion.
No, but, August, not yet a billion.
I think a lot of people...
Nice number.
That would be.
A lot of people working backwards because they want to see that 50 million, what the cash flow on that would be and what have you.
And then live off their cash flow and so and so. Nice.
Got it.
Okay, next question. If you could have dinner with someone dead or alive, who would it be?
Warren Buffett, probably. That would be a good one.
Oh, yeah.
Get him to invest in the Texas deal.
Yeah.
Absolutely. Okay, here we go. If you weren't doing what you're doing today, what would you be doing now?
Surfing on the beach.
Right.
Costa Rica.
Costa Rica.
I'd have my surf shop right there on the beach in Costa Rica, renting surfboards or something.
Jaco is the main beach in Costa Rica, which is a big surf city. But I wouldn't expect anything less from a California guy.
There you go. That's right. That's right. He loves to be out in the sun, on the water. Okay, this is my favorite question: book smarts or street smarts?
Street smarts. For me.
Smarts all the way. Okay. Last question, Mike. If you had $1 million in cash and you had to make one investment today, what would it be other than your Texas deal?
$1 million, I would invest. Invest in real estate.
Yeah.
Sure.
Well, break that down a little bit more, Mike. Come on, we're not going to get off. If you have $1 million cash, let's say your Texas deal would be your number one choice, but what would be the next one? Real estate, what? Because people are listening to this and some people have $1 million cash. What type of real estate? Would it be an LP? Would it be buying a cash flowing property in a high growth area? Would it be short-term rental? Where would it go?
Yeah, I mean, I'd be looking for distressed properties is what I'd be looking for. I think that, and unfortunately, there are that with the economy, the way that it's gone and the interest rates and things, it has caused some distress in the market. And unfortunately, some people that that are not, that are running out of cash. And that unfortunately, it's very unfortunate, but that does open up opportunities for others. And so if you get yourself into that space and connect yourself with a lot of people, and again, that's a great thing about this industry is that, you just get to meet a lot of people that are in this space, and you let people know the type of things that you're looking for, the opportunities will come.
Absolutely.
Nice. Opportunistic real estate investing.
That's right.
As is also known.
You had $1 million cash.
Awesome. Great, man. Thank you so much. Really appreciate it again. Again, there are hard questions at you all day long here. Really appreciate it.
And before we let you go, can you just let everybody know, Mike, what's the best way that they can reach you?
Sure, absolutely. Well, yeah, I'm available on social media. Obviously, you can look up my name, Mike Desrosiers. I'm LinkedIn. All the social media. You can connect with me there. My website is growcaptoday.com, and that's a great place to connect with me as well. I even have a calendar link on there, which you actually schedule a call with me direct.
Amazing. Right on. Amazing.
Thanks
Mike is a great guy. We can attest to that. So again, thanks again, man. Really appreciate it.
Yeah, thanks so much, Mike.
Thank you so much. It's been a pleasure.
Thank you for joining us for this episode. We hope this conversation enlightened you on how to win big in this highly profitable and risk-averse space. Get on your feet and embrace this world that offers so many opportunities just waiting for you out there. Continue your journey to becoming a savvy real estate expert by subscribing to the show at cpicapital.ca. Don't forget to leave a positive rating and share with your friends. See you on the next one.